Hello traders. Welcome to today's Pairs of the Day update. Let's take a look at the latest movements and key factors affecting the British pound, GBP, US dollar, USD, and Canadian dollar, CAD. To start the new trading week, the British pound gained momentum against the US dollar, rising by 0.33%. This uptick came as the greenback softened, with market sentiment shifting in response to evolving expectations around Federal Reserve rate cuts. As investors recalibrate their positions, attention turns to how the Fed's upcoming decisions might influence the pound-sterling to US dollar pair. Looking ahead, August's Purchasing Managers' Index, PMI, figures for the UK are anticipated to reflect stable economic conditions. The manufacturing PMI is expected to hold steady at 52.1, signaling ongoing strength in the sector. Meanwhile, the services PMI is forecasted to edge up to 52.8 from 52.5, suggesting a slight improvement in service sector activity. The US dollar has experienced a decline recently, driven by renewed recession fears. However, a bounce back in US economic data has eased these concerns, shifting investor focus to potential Federal Reserve rate cuts. With Jackson Hole on the horizon, market participants are keenly awaiting any signals from Fed policymakers about future interest rate adjustments. On the data front, August's PMI figures for the US are expected to show a modest downturn. The manufacturing PMI is projected to slip slightly to 49.5 from 49.6, indicating continued contraction in the sector. The services PMI, on the other hand, is forecasted to fall to 54.0 from 55.0, reflecting a potential cooling in service sector growth. This week, the Canadian dollar saw a 0.33% gain against the US dollar, benefiting from the greenback's softness. Despite this, the CAD struggled against other currencies as investors brace for the upcoming Jackson Hole Economic Symposium. Market flows remain cautious as participants await insights from this key event. Canada's latest inflation report is due this Tuesday, with headline Consumer Price Index, CPI, expected to show a decline for July. In contrast, core CPI is forecasted to rise following a previous contraction, highlighting a potential uptick in underlying price pressures. This data will be crucial for gauging future monetary policy moves by the Bank of Canada. Now, let's move on to the technical analysis and check out the charts. We have opened the 4-hour chart of pound sterling to US dollar. The price is currently trading above the 20-period moving average. The stochastic indicator is moving higher inside the overbought area, suggesting a potential upward movement. For support and resistance levels, we have identified 1.2963 and 1.2931 as support, with resistance levels at 1.3010 and 1.3043. If the price moves higher, it may encounter resistance near 1.3010 or potentially extend towards 1.3043. On the downside, any declines could find support around 1.2963 or potentially extend down to 1.2931. Now, let's switch to the 4-hour chart of US dollar to Canadian dollar. The price is currently trading below the 20-period moving average. The stochastic indicator is moving inside the oversold area, suggesting a potential downward movement. For support and resistance levels, we have identified 1.3603 and 1.3565 as support, with resistance levels at 1.3656 and 1.3697. If the price moves lower, it may find support around 1.3603 and potentially extend down to 1.3565. On the upside, resistance could be encountered near 1.3656 or potentially extend towards 1.3697. Always remember to consider your risk management strategy before entering any trades. That's it for today's update. See you in the next video.